Hi guys, this is another video to walk you guys through how to do a 10 column worksheet, this time involving inventory, all right, for a merchandise business. Now, it's not a lot different than a service business 10 column worksheet, which is what we've done in Unit 1. The only real difference though is this line right here of inventory. Okay, so we're going to have to walk our way through and figure out how to deal with that and work that pardon me, work that through our worksheet. Now what I've done already is I've got our trial balance and I've already made the adjustments. Okay, we're not going to walk through adjustments again. Everybody seems to understand that. Okay, just realize that supplies have been credited for $500, supplies expense debited for $500, and the amortization expense and accumulated amortization for $900 respectively. And you'll notice over here I've already transferred all the numbers over to the adjusted trial balance, except with the exception of the inventory number. Now, I'm going to put that in and walk us through it. So I'm going to put $2,000 in our adjusted trial balance under the debit column, all right, which is what I directly take from this figure here. That being said, what I want to start doing now is I want to start filling in these figures here into both my income statement and my balance sheet. So I'm going to start off with revenue. Revenue is going to end up in the income statement. That's a credit. I'm going to do the same thing to my bank charges expense, my supplies expense, and my amortization expense. Now, here's where it gets a little bit tricky. And this is where we deal with inventory, which might seem a little strange, but you'll see that the $2,000 is sitting here as a debit on the adjusted trial balance, but it's sitting up here with all of the balance sheet accounts, which is where it ends up on the balance sheet because it's actually an asset that we own. However, it also ends up on the income statement. If you'll remember back, you'll remember when you calculate cost of goods sold, you include beginning inventory at the very beginning of that calculation. So that number actually ends up acting like a debit, like an expense on our income statement. So we debit $2,000 to the income statement. And what we also have to make sure of, and I'll always give you this piece of information, is to take this figure here, the ending inventory figure, which was counted at $1,000. Now, for now, I'm just going to give you a random figure, and you're going to work with that. So ending inventory was $1,000. Well, if you remember correctly, on the income statement in the cost of goods sold section, we actually subtract off the ending inventory. So that really acts like a credit on your income statement or like a revenue item in a certain way of speaking. It's certainly a contra expense account. Maybe that's another way of putting it. That goes as your credit on your income statement. Right now, you'll notice that there's a credit just sort of sitting here in the middle of nowhere, not really doing anything, and it doesn't have the corresponding debit to it. Well, yes, it does, because that ends up as our debit on our balance sheet, because our ending inventory figure under the the merchandise inventory system has to be the debit balance on your balance sheet, because that's what you own at the end of the year. That's your asset. All right, and you walk through the rest of the figures. I'll just quickly do this here. 1,500, then we've got 300, 5,000, 2,400, 50, 750, and 500. Hopefully I did this correctly. Yep, there we go. Our balance occurs here. Okay, our net income is the same on the income statement and on the balance sheet. That means we've done it correctly. But again, remembering that you take your excuse me, you take your inventory balance that you had at your beginning inventory, you transfer that over here to the adjusted trial balance. That gets placed as a debit on the income statement, which seems kind of counterintuitive because it acts like an asset, but it really is added to cost of goods sold, acts like an expense on the income statement. So we debit the income statement for $2,000. Then you take your credit of $1,000, which in this case is our ending inventory, and you make sure that you debit that amount to balance your debits and credits between these two guys. On one credit goes to the income statement, the other debit, the corresponding debit goes to the balance sheet. And that's how you handle inventory on a 10 column worksheet. Okay, hopefully that makes sense to you guys. If you got any questions, just let me know. Thanks.